सचिन तेंदुलकर बेचारा बोल बोल के थक गया कि म्यूचुअल फंड सही है. You have these chacha mamas and taus who are like, you know, ये टिप खरीद ले, या फिर this friend of yours calls you like ये खरीद ले, मैं बोल रहा हूँ चांद तक जाएगा.
Anyone who tells you that they can predict where the market is going to be at 2 months, 3 months, 1 day, 6 months, 1 year later doesn't know what they're talking about.
If you know how to, or if you want to pick good businesses to invest in, definitely invest directly in stocks. Hi, I'm Sayali.
Hi, I'm Niyati.
And together we're FinCocktail.
Welcome to the Finance Happy Hour.
Today we are talking about something very interesting, the stock market. So, you know what I noticed? I was always reading up articles, and usme se one of them said that there was a record-breaking number of demat accounts that have been opened up in the last 2 or 3 years, since the lockdown essentially, since 2020. Suddenly everybody's so interested in the stock market and people have gone kind of bonkers in terms of, wanting to invest, wanting to trade, wanting to make money in the stock market. They've realized that it's possible and quite easily possible.
Yeah.
So, what do you think about this whole frenzy?
You know, to be very honest, my thought behind this is that when COVID hit, the first few months, obviously there was a little bit of a the market's not doing well and stuff, but then the market started doing exceptionally well. And they managed to reach all-time highs. That is a point in time where everyone suddenly becomes interested in the stock market, because then they're seeing these fancy numbers and fancy things happening in the stock market, and then they want to be a part of it. Correct. So that is just how the human psychology is, that when the markets tend to do well, people want to just join in and be a part of this rally. But honestly, my thought process behind investing directly in the stock market is, I think, very different from this. If I can think back, my first job, my first actual internship was in equity research. And I spent a good 6-8 months in that internship, just sort of researching various companies, figuring out various models, methods and stuff. And along the way I realized that this is really, really hard. It's not as easy as people make it sound. It's not as easy as getting a tip and buying a stock on a whim. And then mostly people tell you when to buy stocks. Nobody tells you when to sell it. So you've bought something at a certain price and then you're just holding on to it for eternity. Maybe not knowing when to sell it. The right time to sell would have passed, and then you've realized much later, when the stock is corrected, that, oh, I should have sold it when it was 20% up or whatever, 15% up. So it's very, very hard in that sense. It's a very time consuming job that requires your focus to be on the markets from 9 to 3:30 every day.
I love that you use the word job, because it literally is like a full-time job. If you're doing a separate full-time job and you think that stock market trading can be a side hustle, see, some people manage to do it, good for them, amazing, but those guys have spent years, I think, getting to understand, getting to know the markets, how they move, how they make decisions on which parameters, etc. I don't think you can just start a side hustle. Like, for example, if you you're a great writer, you can start writing blogs as a freelancer. That's a great side hustle. Stock markets as a side hustle also needs years to sort of develop.
Absolutely.
And this is obviously specific to direct investing in stocks, like buying stocks directly. We're not talking about mutual funds, because that's an indirect way of investing in it.
Absolutely.
We personally love that.
Yeah.
That's for next episode, guys. I agree. It's a full-time job completely. I personally don't own a lot of direct stocks.
It's the same for me. In my portfolio, I might have maybe 10 stocks.
Yeah.
And that too, after doing some bit of research, whatever I understand of it on my own, and then investing in them for the longer term.
Correct.
You know, it's not something that I'm looking to make a quick buck out of. It's not something that I've just bought and I'm going to sell tomorrow or day after once it's a certain percentage up. You know, it's something that I'm going to hold on to my portfolio and probably like hold on to it for 10-12 years. You know, that's my definition of long term when it comes to investing in the stock market. Because honestly, if you're looking to make a quick buck, then it can go either way.
100%.
It's something that, you know, you can't predict. Stock markets are as unpredictable as they can get. You know, anyone who tells you that they can predict where the market is going to be at 2 months, 3 months, 1 day, 6 months, 1 year later doesn't know what they're talking about. They honestly don't know what they're talking about because this is not something that you can predict. This is not something that is set in stone. It's not something that happens year on year.
True.
It takes its own journey, and you know, we just have to sort of try and be a part of it if you want to.
Correct.
But otherwise, you can't be doing things mindlessly where you know you're sort of just taking a tip from someone or like doing something on a whim. Or like, okay, today this is looking good, or today I saw this in CNBC, so I'll go and buy this. You know, it doesn't work that way.
I agree, like especially when you know you have these chacha mamas and taus who are like, you know, ये tip खरीद ले, या फिर this friend of yours calls you like ये खरीद ले, मैं बोल रहा हूँ चांद तक जाएगा. It becomes another, like it stresses me out.
Absolutely. And then you know what happens also is that you know you'll buy small quantities of multiple different stocks, and you'll probably have like 50 different stocks in your portfolio. And what happens is that you have such small quantities of these stocks that even if they were to double, triple, 4 times, 5 times, it's not going to make a significant impact on your portfolio.
Correct. And what about the rest of them which may potentially do badly?
Exactly. Some of them may do badly, some of them may do exceptionally well. But if it is a small quantity or a small amount,
correct,
it's not really going to make too much of a difference in your portfolio. So if you have that kind of conviction to buy a certain script, if you have that kind of know-how and research to buy that certain script, then go ahead and buy it. But otherwise, if you're just going to do it on a whim, please don't do it.
I know, and I think there are just so many other ways of making an informed investment.
Absolutely.
Instead of like, you know, taking stock tips or whatever. But there's this very interesting sort of take on the stock market, which I think I have come to love, is that it's more art than science. You know, a lot of people say that, you know, yes, you have these trend lines and you have these like parameters and you have ratios and this and that. It's still not 2 + 2 = 4. It's apples and oranges. Tomorrow, if investors feel like they're losing, like, you know, confidence in a particular business, even though it may be fundamentally very strong, the stock will crash. I mean, it's all about what the investors are feeling about that business. It's perception building.
Absolutely.
So I think it's also something that even if somebody tries, like, you know, does a lot of research and like, you know, tells you that this will go here, it may take some time because the entire investor community has to believe in that stock for it to reach a certain, you know,
level.
Yes, a certain level.
You're right. When you say that 2 + 2 doesn't = 4, it's absolutely true for the stock markets because, you know, it's not just technical and fundamental analysis. You can, I mean, that is the major sort of...
Yes. It's a part of it.
It's a major part of choosing a stock or picking a stock, but it's never 2 + 2 = 4. So you may like have all the fundamental and technical analysis done over a particular stock, but it may still not reach where you want it to reach.
In whatever time you want it to.
In the time frame that you've thought of.
Correct.
It might take its own sweet time, and that is the fun of investing in the stock market. I mean, I don't know if I'd call it fun, but...
but I mean, that brings me to the point, right? A lot of people say that stock market is like gambling. So is it really like gambling, like fun, or is it, I guess, a calculated risk?
I would definitely say it's a calculated risk because if you've done your research and then you're investing in a particular stock, then it can't be called gambling.
Yeah.
Okay? Because then you know what you're doing.
Correct.
At least you have a certain sort of basis for
Correct.
making a particular decision.
100%. I also agree. Even I think that investing in the stock market or picking stocks directly is investing in those businesses.
Yeah.
It's literally believing in that company or that business where you know that you've done your research on that. You believe that this company is fundamentally strong and will take your stock figure from a certain number. So I think it's definitely not gambling, but yes, it does have a certain amount of risk in it. You
Yeah,
should understand
but the way novice investors look at buying stocks, that could be called gambling because
Oh, yeah.
they don't really know what they're doing.
Yeah.
They're just doing it to be a part of the stock market or
Correct.
just because somebody told them to do it. That is not the way to invest in stock markets. Like honestly, I've been in this field of finance and investing for almost now 8 years,
Yeah.
but 8 or 9 years, but I would still consider myself when it comes to buying stocks directly, I don't think I'm good at it.
Yeah.
Or
No,
honestly,
it takes guts to even accept that, but I agree with you completely.
yeah, because I honestly don't have the bandwidth and the time to do that kind of research that is required, and that's why almost 90% of my portfolio is in mutual funds.
Correct.
And just that 10%
Correct.
is something where I buy a few stocks
Yeah.
here or there, and I've managed to do some research, and that's why they're a part of my long-term portfolio. But it's not because I want to trade in them and make a quick buck.
Yeah, I agree. Same thing, right? Both of us are investors more than traders.
Yeah.
And even I can't I don't have the time.
Yeah.
It's not like we can't. I think it's more about having the bandwidth and the time to invest in picking the stock, because there's so much research that goes behind it. You have to look at the financials, you have to attend investor calls, you have to make sure that you're up to date with any announcement that the company makes.
Absolutely.
What is the CEO, CFO saying about the company in public?
Yeah, what's the intention of the management?
Yes,
I mean,
absolutely.
that makes a very big difference also.
Huge. What are investors saying about the company?
Yeah.
Because ultimately
Investor sentiment is everything.
completely.
Yeah.
So I think there's just so much that goes behind it that it becomes just very, very difficult. And especially with I would say majority of audience that is interested in the stock market or investing directly in stocks has a full-time job. So
Yeah.
they don't have the bandwidth to sit back, go through their yearly annual reports for the last 5-10 years
Yeah.
and see where the company is going, what their vision is,
Yeah.
what their growth plan is.
Yeah.
They don't. Even if you see IPOs had become such a big topic of conversation, where
Absolutely.
Zomato's getting an IPO, Paytm is getting an IPO, this, that. And I was like, but IPO is just the first step to the stock market, right?
Yeah.
You don't have to go and iske liye apply kiya kya.
Yeah,
That has become a new thing.
And in fact, I would say that it's riskier than investing in a stock.
Yes.
When you think about investing in an IPO, you don't know anything.
Correct.
You don't have too much public information
Correct.
available
Correct.
about the financials.
Yeah.
Or there is no technical charts that you can look at to
Correct.
look at past performance. So you don't have a basis of investment.
Yeah. It's new. It's brand new.
It's brand new. So I think investing in IPOs is definitely more challenging than investing in listed equity.
Correct.
Directly.
Yeah.
So people just talk about all this from a perspective of trying to be a part of
The hoopla.
Yeah, the hoopla. It's just the hoopla. I don't think that and this hoopla dies down because the market goes through a cycle, and when there's a bad cycle, there aren't going to be that many IPOs. People are going to start dissing the stocks that they've bought because they aren't doing well, because they don't have any grounds for buying these stocks that they've bought.
Yeah.
So it's something like a cycle which people always tend to sort of go through. When the markets are doing well, you want to be a part of it. When they're not doing well, you want to just abuse the markets.
Yeah, I agree. And this is also why like a lot of novice investors, first time investors in the stock market also end up losing money, right?
Yeah.
Because they want to invest when the market is at an all-time high.
Yeah.
When the market falls, they're like, oh no, too risky, going to pull out my money. I said, but that is what you have to weather, right?
Yeah.
Because then there'll be another high. If you've invested here, this is what you
Yeah.
have to wait for, not this.
Yeah, absolutely.
So I think it's just, it's not for the faint-hearted, for
It
sure.
is definitely not for the faint-hearted, and it's definitely not something that you should be doing to look cool or be cool or sound cool. Like, it's something that requires a lot of time, focus and attention, and I think that if you're not able to devote that sort of commitment to this, then it's definitely better to stay away and, like, you know, give this responsibility to somebody who knows what they're doing.
Correct.
For example, when you're investing through mutual funds, you're trusting the fund manager to do his job right. He is somebody who's been in the market for a while. He's somebody who's been doing this for a while. He has a track record, or he or she, whoever. So they've been doing this for a while, and therefore it makes sense for you to sort of trust them to do their job.
Correct. I agree.
You know, it's just like, if you know, in any profession, you outsource activities.
Correct. You go to the expert.
You go to the expert.
Exactly.
This is exactly like that. You go to the expert and let them do their job.
Yeah, I agree.
So according to you, do you really think it makes sense for everyone to have equity or stocks as a part of their portfolio?
I think yes, because equity is an asset class that is available to everybody, and everybody should take advantage of it. That is something that I genuinely believe. But how you invest in stocks is up to you. Now, if you are, if you are an expert in that, not an expert, even if you know how to go about investing in stocks or picking stocks for the long term. Here I'm talking long term, matlab 7-10 years.
Yeah.
If you know how to, or if you want to pick good businesses to invest in, definitely, like, invest directly in stocks. If you don't have the time, don't have the bandwidth, mutual funds are always there.
Yeah.
Sachin Tendulkar बेचारा बोल के थक गया कि mutual funds आई है. But I think it's very important for at least investors who are there in the market for the long term, who have that ability to take on that risk, to invest in equity, because it really gives your entire portfolio that push. Absolutely. That's needed.
I couldn't agree more, because I think equity is the only asset class in this country that has managed to give those, mouth-watering returns.
Yeah.
When you compare it to other asset classes like debt.
Correct.
Or maybe even real estate or gold, or, even private equity. Equity is something that's been around for a while.
Correct.
It's got a track record, and it's continued over the long term to give that double-digit return which everyone sort of wants to have in their portfolio. So, depends on your risk-taking ability, depends on your liquidity requirement, your time horizon for investment, all of that. But I think everyone should have at least a small portion of equity as a part of their portfolio.
I agree.
As a part of their long-term portfolio.
Correct, I agree. And when you say long-term, now this is obviously everybody's favorite thing to talk about. But do you think equity does actually make money, and does it actually help you beat inflation? Is this the only solution?
I think absolutely.
Yeah.
As long as you're invested in the right stocks or the right mutual funds, or you've got your money put in the right place, when it comes to the stock market, it is definitely going to beat inflation. For example, inflation in this country is at about 7% right now. Any basic index fund that you even pick has managed to give you at least 11% over 5 or 7 years.
Correct.
So that's the sort of difference that we're looking at. That's the difference that is going to give your portfolio that push.
Correct.
7% versus 11%.
Yeah.
You just have to have the patience.
I agree.
And sometimes, like I said, you don't even need to have the know-how.
Yeah.
If you're just picking an index fund, then it's not like it's not rocket science.
Yeah.
You don't have to use your brains too much. You don't have to trust some fund manager to do active portfolio management.
Yeah.
You're just buying into the index.
Yeah.
And it's as easy as it can get.
I agree.
And it will still give you
That-
that 4% extra.
Correct. I completely agree. And I think it's this is where we also sort of have already moved on to our next episode. So watch out for that. It's going to be on mutual funds. But it's very important to understand that equity is available and it's been made available for everybody while managing their risk also, because like, you know, when you invest through mutual funds, etc., they help you diversify
Yeah.
by not hedging all your bets on one business or two businesses.
Absolutely.
And there are different types of mutual funds available for everyone. So again, talk about that later.
So I think you guys have figured out through this entire episode that both Sayali and me aren't big fans of investing directly in the stock market, and that's only because I don't think that I personally have the bandwidth and the know-how. But if you do, then it's great, you know. So this is really something that you need to take a call on, especially if you are just beginning your investment journey.
Yeah, absolutely. But we are going to talk about something that we are major fans of, which are mutual funds, and that's going to be on our next episode. So stay tuned.